Hello, everyone. Welcome to Arbitrage Trade. I am Royce Wells, and it is Sunday, April the 14th, 2024, the day before tax day. And a lot of you guys may be trying to get your taxes done, but don't forget about your cryptocurrency. But before you get out of Dodge, which is the name of this seminar, we're going to say get out of Doge, maybe. If you've ever used our system, we're on our 4-hour time frame. Much like any system, there's an early warning system that lets us know when it's time to, quite frankly, get out. So we're going to talk about that right now. In our system, we have an orbit line. The orbit line lets us know when it's time to get out before we make it to the RSI line, which bounces within our arbitrage band on whichever frequency that we are currently at. Well, as of this morning, and it is early morning, or late afternoon, depending on when you're seeing this, roughly last night, Saturday the 13th at about 11 p.m. Central Standard Time, we got a get out of Dodge or Doge alert. And that means it may be coming down soon. So let's take a look at some of the other things that may be coming down soon. In our system, we have lots of early warning systems, and Doge is not the only one that basically crossed under that line today. We're watching Bitcoin. Bitcoin fell from the sky. The candles fell under roughly, um, the candles fell under roughly Friday at about 11 a.m. and it just continued to fall. It had previously been holding our orbit line, letting us know, say, hey, no, we're good. We can stay above this line for an indefinite amount of time. But eventually, all things must come to an end. And so this looks like the end of the Bitcoin run that basically started all the way in February when Bitcoin was sitting at about 44,000. The triangles that you're seeing on your screen, the red recycle triangles, basically lets us know it's about to go down. And the green recycle triangles let us know it's about to go up, but on the weekly time frame. So what you're seeing here is the weekly said it was about to go down. Then the weekly said, no, just kidding. We're going up. It got overbought. That's what these O's are for. It went sideways for, 4 or 5 days in the same range, refusing to go anywhere past 51,000. And then it took off again. Got to the edge of the band and said, hey, this is the end. This is where we want to leave at about 65,000. But then the daily said, hey, okay, you've done that. Great. Let's ride this up again. So we got back in, and then the daily once again said it was time to go. And then it was a little bit choppy. But so this brings us back down to our 4-hour time frame saying, okay, we are really running out of steam now. So things are about to get really ugly. And we got our confirmation that both our compass line and our momentum line made it under our orbit line, which is our early warning system and our apocalypse band, that things, while they were good, may not stay good for very much longer. So I know that there is a halving coming. I want to say it's April the 20th to 23rd, somewhere in there. The halving event will be occurring. For you guys who may not be acquainted with this event, that means for those people who are mining Bitcoin, only about 3.125 will be available to mine every time it's mined, as opposed to the last halving where it could and would mine about 6.2 ish when mining. So that means the supply of Bitcoin is actually drying up. So people would say that the supply is drying up, but is it? No, not really. So what's really happening is basically they are putting fewer out there, but that still means the ones that are out there are still in circulation. So the demand for those are still quite in use. So while you will not be able to mine as many, Bitcoin is still alive and well. Let's go take a look at Ethereum to see if it's anywhere near that same point. Well, Ethereum has fallen much further, much faster, and we actually got the sell signal on it on April Fool's Day, around about that 11 o'clock hour, where both the composite and the momentum line made under the 4-hour time frame. Since then, it ran back up to about 3,700, but could not, and what it is the composite and momentum line could not break above that purple line. And because they couldn't make it above that purple line, it eventually tipped off the daily to say, nope, we're going down, and the weekly to say, nope, we're going down. So now all we are waiting for is that second or last confirmation to put the nail in that coffin to see if Ethereum will actually make it below that 31.8798. And so far, the candles are saying, yes, it can. It had a slight fall all the way down to 2,800 for a brief moment Saturday about 3 p.m., but was able to pull itself back up. The question is, will it be able to get back above 31.87 anytime soon? The apocalypse band and for the buy to continue said that it had to go back and touch that 31.80, which is why if you watched the last seminar, we said that, and hopefully you heeded that, and you were able to take your profit tick tick, which was the last title of the last seminar. So as we go on, things are looking very grim for Ethereum currently. The next level of support for these candles is about 27.17. So if you haven't taken profit, you might want to consider at least reevaluating where we are going. For probability to work in our favor, for us to get back into an uptrend, everything depends on our trend top and our trend bottom. So if the trend top and trend bottom have both fallen below our orbit line, the probability of them making it back over that orbit line is almost improbable. Let's go take a look at Cardano. Cardano is much further along. We got the sell signal from the weekly time frame around April the 7th, so last Sunday. We also got the sell signal Monday from the daily time frame saying it's time to go. And then we got finally on Monday at about 11 o'clock, we got the red X letting us know the 4-hour time frame also agreed that it was time to go. So from 62 cents-ish all the way back down to 46 cents-ish, we basically got a bottom, which is that O that we're seeing. But the question is, where do we go from here? Nothing is lit, but we do see that probability is quite exhausted in almost all of the middle bands in the system. So will it bounce? Will we be able to get out of Dodge on this particular cryptocurrency? Maybe, maybe not. All right, let's go take a look at Shiba Inu. Shiba Inu also crossed underneath roughly April the 9th and around 3 o'clock Central Standard Time as well. And the momentum line crossed at about 11 o'clock, also April the 9th. So a lot of stuff was going on at night. And if you woke up to sheer blood. It went from about 28 all the way down to about 18. So it lost a huge chunk of its worth. And the question is, will it be able to hold this 2059 valuation? So far, it has been. So let's see if it can continue that. But once again, from where we're seeing and what we're seeing and watching here, the trend top is below the orbit line. So it looks very grim for Shiba Inu. Meanwhile, Solana also fell under Friday, April the 12th, not 13th, and let us know it was time to go there, which was at about 172. Previously, once again, we had not been underneath that line. Probability had ran out of the system. roughly when it was about 210, and hopefully you made your leave and you didn't get greedy. The daily time frame said, yes, it's time to go, and we're waiting to see when the weekly time frame will chime in and says it's over, and the longer time frame will take over and continue to lead this particular cryptocurrency down. The painful part is that once again, the trend top and the trend bottom is now below our orbit line, which means the probability of getting back above that 171 valuation anytime soon is very, very low. All right, let's go see Link USD. All these guys falling and falling hard. Link USD is ahead of the curve, though, because all the way over here, the weekly said it was time to go. The daily tried to fight it and then finally said, no, you're right. Trend top can't get above the orbit line. And down it came as a giant waterfall. So it bounced one time, which allowed the compass to get underneath the red line, and that was the final nail in the coffin. It's just been free falling ever since. Hopefully you were not there. Hopefully you guys were able to get out much sooner than that. The highest I think it got to was about $22.88, and $13.91 is a far cry from that $28 valuation, but not too far from that recent low of $12.60. Okay, let's go take a look at some more things. Mara, because we're talking about cryptocurrency. Once again, Mara had a not so good time. Once again, from about $32, $33 valuation, it went outside of our arbitrage band twice, our apocalypse band. This is this big band here, the great one. Said take your profit if you left at $31, take your profit if you left at $33. If you didn't listen, and then the daily turn, and then the weekly turn, but by the time the weekly had turned, we were already below the orbit line. So basically clear sailing all the way down. The painful part about this guy, it may not recover as quickly or as nicely as we want, but I do think that we are kind of stuck in a little bit of a channel where we are. We're trapped between the RSI line of the Apocalypse Man and the mean line of the Apocalypse Man, and the trend top and trend bottom are perfectly fixed between those two. So that means it's anybody's game. I'm expecting a ton of volatility from Mara in the very near future. So watch this guy. This may be a power play coming soon, but basically it may not be safe to enter this longer term until it's back over 2106. So keep an eye on it as it may continue to fall. The sell trend, in order for the sell trend to continue, it has to get back up to about 1840. So 1840 should put us very near that valuation of the RSI line, but it should not be able to get much further than that. But if it falls down there and then goes up there, the next leg should be a down leg in this trend. So I'm expecting up to there and then down to there. I always draw these arrows before, so that way we can see how it progresses as the week goes on. So somewhere around 25th or so, next Sunday or Monday, or maybe even the next Sunday seminar, we'll see where Mara goes or has gone this past week. Let's go take a look at some of these US stocks. Oh, the red, oh, the horror, oh, the pain. Remember when I said that AutoZone had to go back down and visit around 3,000? Well, guess what? The intermediate band, if you literally watch the very last seminar, we saw that the daily time frame said, yeah, we're going down, and because we were completely outside of the band, that's 3 standard deviations at that red line, and us coming back in was like, yeah, we need to cool off. We got here too quickly. And our canary line, or our orbit line that basically lets us know where the point of no return is sitting at about 2847. And the weekly time frame is saying, hey, it's about that time. So things are looking just a little bit hairy. There is support if you're looking at this from the 1 minute, 5 minute, 15 minute, all the way up to the 4 hour time frame. Looks like there's heavy support right around 2,900. So from where we are, there may be about 60 or so more dollars that can be lost, but hopefully won't be lost in the very near future. Meanwhile, international paper jumped up and got down. It got all the way up to its 3 standard deviations on our 4 hour time frame and said, nope, can't go outside there. That's not allowed. So those dollar signs are saying take profit. So hopefully you took profit in March on Tuesday when those alerts fired. And if you're using the system, the daily said it was time to leave roughly around 38 or so, and it's still free falling. But once again, there is hope for all of this. International paper, I think, in recent news, just appointed a new CEO. So with that being said, I'm expecting from this chart at least for us to hold this orbit line and be able to go up from here. So there's a lot that can be seen and said for international paper. But as far as statistics and probability goes, looks like it will be holding the line longer term. Meanwhile, we're watching US Steel. There's a lot going on with US Steel. It's trying its best to stay above that pink line on the 4 hour time frame. Daily went red, weekly went red, daily went green, and so far we are holding the line. The trend top and trend bottom are juxtaposed against that RSI line on our 4 hour time frame. The only problem is we are already past our orbit line, which means we should have already sold. So hopefully, like we were talking about last week, take your profit, tick, tick. Don't let the valuation that it currently has slip away without you getting some profit. But with that being said, these are securities, and I am not a financial advisor, so this is not financial advice. Please use these indicators at your own risk. And do seek the aid of a duly licensed financial advisor before making changes to your own portfolio. All right, let's go take a look at Amazon. Amazon, steady as she goes. The daily just keeps on going up. It cools off a little. Notice the weekly all the way down here at about 132 said we're going into a buy trend. And it got there, and the daily went, oh, I'm going to cool off a little bit. Oh, okay, we're going to try to go up again. It fell down, then up. It went again and again and again, but we were always able to notice the trend bottom holding that orbit line and continue to ride up. The only thing that's more than slightly scary about this trend is that 159 is a valuation that it can reach. Anytime these candles basically start to slow down and can't maintain their speed, they reach a critical mass or a critical speed. Once that happens, they have to fall and they have to either touch our orbit and or our RSI line. That typically does not have to happen until this pink line is in this dark gray area. So let's see if that happens. But this buy trend is in danger, and 3 of the bands are saying, yeah, no, there is no room. We must come down. So let's go take a look at the arbitrage band while we're here, just to basically make sure we're all seeing the exact same thing. Yep, sitting at the very top of the arbitrage band on the very edge with the black line sitting on the edge as well, and the candle basically trying to find support on it. The trend bottom has made it underneath the RSI line, so that's the first phase that has to happen before a new trend will start. So we'll watch a little bit closer and see if these candles can trespass underneath the black line and then drag the compass and momentum line under it as the week progresses. Meanwhile, FedEx, nice start to March, looks like. 21st of March, it got to about $300 valuation, and then quickly, promptly, swiftly sold back off. So we're watching this guy, and we see that basically he went under, but FedEx as a whole on the weekly is still in an overall buy trend. The 4-hour time frame just has to cool off, but it looks like the daily wants to get in on this action as well. So we'll be watching very closely to see if FedEx can basically shrug off what the rest of the market is doing. Because as you can see, we're just getting to that point. Daily basically gave us a nice ride with that nice green arrow that happened on March the 5th, saying it was at 243, and up it went. Got up, like I said, we see our O's and our Z's letting us know it was time to go at 290-ish, and hopefully you were able to get that and you were able to go. Real estate, real estate. Is this really real estate? At this point, it just looks bloody. Hopefully you guys saw our seminar last week where we were talking about this. Let's go back to our Apocalypse Man. And from our Apocalypse Man, daily, weekly, and so far, I'm going to expand this guy once again. This guy has been from the gap up to the gap down. That allowed our trend top and trend bottom to penetrate underneath and dive underneath. So it's in free fall mode right now. I mean, that's the best way to describe it. What we're seeing is the trend bottom has made its way underneath the mean line as well as the RSI line, allowing a lower fall for the real estate investment ETF to fall. So let's go take a look at the arbitrage man on our weekly time frame to see how close to it is it to basically realizing that it's an overall longer term sell-off. So right now we look like we have support around 2290, and that's the line in the sand more or less to keep us in a buy trend on the weekly time frame. We had a very nice run where it went from 22 all the way back up to roughly 25, so about more than a 15% run since November. And then it basically it's currently topping out, forming a nice M for murder. And I'm expecting blood in the streets longer term. Meanwhile, Tesla falling, yes, falling, no, falling, maybe. Look at this guy. Everyone has been dogging Tesla, but on the weekly, we got red. So about 4 or 5 weeks ago, we got red from Tesla when it was about 183. It fell all the way down to about 160 and is currently trying to pull itself back up. On the daily time frame, we do have a green arrow letting us know that, hey, I want to go back up. And what happened is basically the weekly also said we needed to go back up because we were on the edge of the arbitrage band, and that black line got into the dark brown area, which means it absolutely had the bounce. So from that bounce, we have so far made it back up, and notice this trend top is just above that RSI line. So we want to see if Tesla will get a nice push to the upside and give us some more love in the very near future. Everyone's been dogging EVs and basically the energy initiative that the globe has been on recently. China has been producing really, really inexpensive electric vehicles, but maybe Tesla may be down, but Tesla may not be necessarily out. So let's see where it goes longer term. Now let's get to our bread and butter, because we like bread and we like butter. Looking at the dollar, with everything that's been going on, the dollar on the daily time frame is running out of probability, which means good things and bad things for people playing the dollar. We got on the daily time frame, we got a green arrow. On the weekly, we got a green arrow. On the monthly time frame, I believe, on the monthly time frame, let me turn off those arrows for the weekly really quickly in our atlas, just so it's not so noisy. But from where we're sitting, we do see that it's currently overbought. So I'm expecting a little bit of a pullback on DXY as we go into this trading week. But these are nice lows so far. But from where we are on this time frame, we are not in any danger of actually being in a sell trend. So all of these guys are at a nice healthy click and sitting over a 25% probability on each one of these bands. So let's see if it can just kind of pause, chill, relax to the next episode, right? But from where we are currently, um, I'm expecting just a little bit of a pullback. And if that pullback were to happen, it could go as low as 104.75 before possibly continuing on. Like I said, the novice band is a little bit out of probability. The arbitrage band is a little bit out of probability. Anything above 70% in our system means a pullback is imminent, and these guys are almost at 100%. So expect a little bit of a pullback on dollar going into the week. Meanwhile, Japan. Japan. What is up with Japan? Probability does not need to shrink anymore. So for a minute, probability that pushed down gave JXY an opportunity to actually try to get above this RSI line, but JXY just refuses to have any volatility. And as long as it doesn't have any volatility, as long as it's underneath that black line, it's a steady stream down. But driving JXY when against New Zealand dollar, we are underneath. It tried to break over to say, yeah, we're going to continue this trend up. And we've been underneath. So the compass line and the momentum line have been underneath this black line literally since around the beginning of March and has not been able to get back over. And the first thing it did was on Fridays, like, nope, we're going to try to recapture that high, but we're not, and we're going to fall through the floor, once again, allowing our trend bottom to expand underneath us. So I'm not sure if we're going to get any more up from NZD, JPY, but right now it looks like it's repelling off of that RSI line, which should allow us to continue our trek down, as it were. AUD, JPY got dollar signs and said, hey, we're done. We are done. Let's be done. But are we done? Maybe, maybe not. Once again, because of the size of these candles, it's allowed our trend bottom to trespass underneath our RSI line. So, and we got these dollar signs telling us to take profit when it was just at about 131 cents. So from where we are, I want to see if the compass will actually trespass underneath the momentum line. That's our first line of defense here. And then see if it will actually continue to trespass down. Looking at the Apocalypse Man, which has this guy in danger, that means I'm assuming that we're in the danger zone on our Apocalypse Man. Going to the Apocalypse Man on this time frame, we are in the danger zone, and these candles basically have a hard warning at a 95.61. So if we can hold 95.61, that would be some very good things for us. So, but from where we currently are, it's saying 93.89 is within reason, folks. So that's a good 700 or so pip fall. So please do not get caught by that if it does in fact play out that way. Meanwhile, Euro JPY is saying 157 is the first indicator, and then the next is 149. So 149.88 from where we currently are, that's about a 1,400 pip sell-off. So if you're watching this, please, please, for the love of everything holy, do not get caught up in the thresh because we're just at the beginning of this cycle. There's a whole lot more that can turn red before things get any better. Looking at GBP JPY, once again, seeing that trend bottom expand down and the compass being underneath the momentum line is not a good look for GBP JPY. From where we currently are, it has support at about 183. So making it down to 183 is a must, but as we can see, when we broke over 163, that gave it nothing but blue skies in March of 2023, and basically it's been giving us a run for our money ever since. Don't let it scare you. Don't let it spook you. 174.13 is the first or the last line of defense to keep the buy trend going, but that means you're going to have a lot of blood before we get there. About 1,600 pips could be waiting for you if you're brave enough to take them. Hope this has been helpful. We appreciate all of you and have a very good week and a very successful trading week while you try to stay out of Dodge.